of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show. I'm Ishan Gera. In this episode, we shall discuss the week's significant developments with a cover story highlighting the merger of state insurance firms and the impact of composite licensing on the state insurance business. We have an interview lined up with VP Nandakumar, MD and CEO of Manappuram Finance Limited, where he talks about the outlook for gold prices and the future strategy. In a Banking for You section, experts explain the workings of a composite license and how it will make your life easier. Our banking expert Tamal Bandyopadhyay discusses the tenure of RBI Governor Shaktikanta Das and the challenges ahead. At the end of the episode, we shall discuss the results of the last week's poll and ask you the question for the next one. Problems have started brewing for India's payment ecosystem. Reserve Bank of India asked some payment aggregators, Razorpay being one of them, to stop onboarding merchants. The decision came as the company is yet to submit a system audit report to the central bank. In other news, the Finance Ministry had to pull up public sector banks for mis-selling or forced selling of insurance products, as such practices hurt core business solutions. A discussion on India's insurance sector is long overdue in the country, especially concerning the fate of public sector insurance firms. In our cover story this week, we explore this issue in detail. A discussion on the insurance sector is incomplete without a reference to Life Insurance Corporation, the largest insurer listed earlier this year, raking in over 20,000 crore rupees for the government. Although its stock is trading at a discount from its subscription price, the ensuing changes bode well for the company and the industry. The government has recommended further reforms in the insurance sector to the tune of a composite license. An amendment to the Insurance Act will help life insurers like LIC obtain a composite license and enter other insurance markets. Expanding the base is expected to help LIC leverage its large subscriber base and agent network to deepen the insurance market and increase penetration. Despite the government's best efforts, India has lower insurance penetration than most major economies. So what can a composite license do for LIC? Let's go to Subrata Panda to understand.
LIC has always wanted to sell indemnity-based health products. It has a huge agency base, which with a little bit of training will work wonders in driving penetration of health insurance market in the country. LIC sees this segment as a huge opportunity. Not only LIC, all the large life insurance companies want to get into this indemnity-based health segment because they see this as an opportunity, as they believe mortality and morbidity risks are similar risks, and perhaps the life insurance companies are better equipped to handle these risks.
Another proposal on the table, media reports suggest, is the merger of LIC with other 4 national insurers. The employee unions in the 4 government-owned general insurance companies, the Oriental Insurance Company Limited, National Insurance Company Limited, the New India Assurance Company Limited, and United India Insurance Company Limited, have been demanding the merger of the companies into one strong entity. But can such a merger benefit LIC, and does making the already colossal insurer even bigger make sense? Let's understand their fundamentals first. The government has been making repeated capital infusions in public sector insurers to keep them afloat. In 2020-21, it infused 9,950 crore rupees in 3 general insurance companies. Last fiscal, it provided a capital injection of 5,000 crore rupees. Its current capital provisions may be more than double last year's. 5,000 crore rupees has already been infused, and more would have to be given the wage revisions announced by the insurers. Another metric to look at is the solvency ratio, or excess cash over a company's perceived liabilities. While LIC had a solvency ratio of over 1.5, the requirement set by IRDAI for general insurers, United India had a solvency ratio of 0.43 by the first quarter of this year, whereas national insurance ratio was 0.63. New India was the only profitable enterprise. Subrata Panda thus believes the merger can be detrimental to LIC.
Given the financial condition of these state-owned general insurers, merging them with LIC is perhaps not the best solution. They might prove to be a drag on LIC's books. Also, being a listed entity now, LIC has to answer to the shareholders on what benefit it will derive from these ailing state-owned insurers. Given its share price has taken a huge beating since it got listed, it has to perform on the parameters that investors track in a life insurance company. So it may not turn out to be a wise decision if the government decides to merge these insurers with LIC.
Does privatization make more sense in that case? We had an expert answer our query.
If you look at the objective of the privatization is to bring efficiency and competition to the sector. It has already, we have so many private general insurance companies or the life insurance companies, but at the same time, we can merge these entities, make them stronger so that they can go back and fight with the incumbent private players. So in my view, merging these companies is a better option.
Whichever way the government decides, it would need to bring back the public sector to health if it is to achieve its goal of greater insurance penetration. IRDAI, the insurance regulator goal, is to increase insurance penetration in the country. The private sector can be leveraged to achieve some of its objectives. But it would also need the public sector to step in, that too in a big manner. Another sector that has received quite a fillip post-pandemic is NBFC lending. Kerala-based Manappuram Finance is a name to reckon with in gold lending. Raghu Mohan spoke with VP Nandakumar, MD and CEO of Manappuram Finance Limited, on the outlook for gold prices given rising interest rates and the impact on lending in India.
Welcome to the BS Banking Show, Mr. Nandakumar. Can you give us your outlook for gold prices, given the fact that the Fed is still not done with its rate hikes in the United States?
Yeah, I feel like the gold price will only increase. The likelihood is only increase. So it may hover around 1750 to 1800. It is already there. This is what is on the expected lines, because the federal may further raise the policy rate. This is the indication here. So it will remain somewhere here, 1700 to 1800. This is our assessment of the gold price.
What does it mean for gold loan availers in India? Can you just elaborate a bit on this?
See, it is not based on gold price. It is because our loan to value, average loan to value is less than 70%, whereas the customers have the ability to borrow up to 75%. So that it indicates that it is not linked to the gold price alone. So if the gold price goes up, it has come down in the past also. It has come down to around 62-65%. So immediately when more money is available, they will not avail. The reason is this is the underlying collateral is very precious for them. So while borrowing, they have in mind, yes, in 3 months' time or 6 months' time, I will have to redeem. So whether I have the cash flow to redeem it, that is very, very well there, because this is the only loan where the collateral is a cash equivalent and it is with the lender, which can be monetized, liquidated in case of event at any point of time, unlike a housing loan where the borrower himself owns the collateral security. And also even with the repossession, the selling of a mortgaged product is not easy if it is a lender property. Here it is a cash equivalent, and that also all the time the demand is there, and the price is dependent on the international price of gold, etc. So there is a standard price. So monetizing that an NPA is easier here, and the customer also knows pretty well if he doesn't have the cash flow to redeem it, you lose it. Rather, let us go and sell it in the scrap market. So it is not dependent on gold price. It is dependent on his necessity and his cash flow.
With the entry of banks into the gold loan segment, has it affected your relatively better off customers?
So, yeah, not see it has affected in some way, but the business may not be affected. The reason is the largest segment, the largest lender as far as gold loan segment is concerned is neither bank nor an NBFC. It still remains an unorganized lender. Their number are their number running into millions in India. There is no record, and because of the convenience factor, they are the largest lenders, and there is no estimate because these are not many a time accounted. So, but the estimate is around two-third lending is coming from the unorganized lender. What happens to him is lack of transparency and usurious rate of interest. NBFCs have weaned away customers from the unorganized lender because we are available from say from 8:30 to 5:30, even a lesser number of holidays than a bank, and the appraisals everything is being done by the company employees as far as NBFC is concerned. This is the advantage for us. So, even though there is some weaning away of our higher ticket customers from, by the banks, our the opportunity to grow, lend and grow will not come down because the larger market is still outside. And India is importing almost 1,000 tons of gold as per the records for the past several years in India. And what has come to the gold mortgage market is only a minuscule portion of that. So, with a more awareness created across India, the taboo that was there as far as availing a gold loan is concerned, it will wane away.
A related question: what more can be done to monetize gold lying idle with Indians?
Yeah. So if you have, I will take a couple of minutes of yours.
Yes, sir.
Yeah. So there was no official estimate with anybody, with authorities, until we made some research in this using IMAX. And we have submitted to all the authorities as and when it was available. The reason is we are the first NBFC, gold loan NBFC in the country. So, way back in 1994, 95, we got the company listed. And from Kerala, we are the first gold loan NBFC to get credit rating, etc. Going to the market, particularly for raising FDA, etc., we need a lot of study about gold and gold loan. So we engaged the Gram Management Services, IMAX, for a study. And they did a research, and yeah, they came out with a report stating that the gold in the country is estimated at around 18,000 tons to 25,000 tons. This is way back in 2007. 2007, this was the report. And every year, as per the report, India is importing 1,000 tons annually. So, what would be the estimated gold in the country? And in the study itself, they have said that the major portion of these gold is not with any government authorities or not with any HNIs. These are the major portion is with the rural household, and very few, very minuscule portion of that with family temples, etc. So these are why, because with the olden days, when the banking facility was unreachable in rural areas, they used to invest whatever surplus in the gold, and it has also become a family ritual. And also at the time of marriage, etc., etc., these are being transferred to the bride, etc. We know that what is this has been treated as a store for value. Now, even when the density of banking has increased, the culture of storing some value in gold has not gone down in semi-urban and rural areas. It's very evident from the fact that India is importing 1,000 plus tons annually into India. 1,000. So, and these are majorly going for jewelry making, and all the jewelers are also expanding their reach to even to rural areas, even large jewelers. So the scope is increasing. So even when the banks have weaned away some customers, NBFCs have enough headroom to be a lender for the common people, bottom of the pyramid, and coexisting banks and NBFCs in gold loan space is no issue, and each of them, either of them, have good opportunity for growth.
Mr. Nandakumar, it was wonderful talking to you. We look forward to having you sometime soon again. Have a good day.
Thank you, Mr. Gu. Anytime. Yes, I am also really delighted to talk to you.
The gold price would hover around the $1,750 and $1,800 range, Nandakumar says. Post-pandemic demand for loans from the upper middle class has remained stable, whereas demand from the lower middle class is yet to pick up. The insurance sector is also expecting a pickup in demand post-COVID, and the government is readying a plan to overhaul the industry. The government is expected to amend the Insurance Act to allow insurers to operate in multiple lines of business. While it will expand the depth of insurance firms, how will it impact the consumers? Our experts answer in our Banking for You section.
The Department of Financial Services has suggested amendments to the Insurance Act of 1938. As per these amendments, it wants to allow insurers to operate in multiple lines of business: general, life, and health. If the Insurance Act gets amended, insurers will be able to operate in all three segments without needing separate licenses from the regulator for each business, provided they meet the minimum capital requirement. Industry insiders are optimistic about the prospect of a composite license arrangement. According to them, insurers will now have more flexibility in operating in multiple lines of insurance without having a separate insurance company selling life, general, and health business. Besides, this will provide agents flexibility as they would be allowed to conduct multiple lines of business with a single insurer. These changes will also make it easier for life insurance companies to sell health indemnity policies. This has been one of the long-standing demands of the life insurance sector, as they believe life insurance companies should handle the concept of mortality and morbidity. Even LIC has been looking to sell health indemnity policies for a long time, given their agency network. Currently, bank-promoted insurance companies operate across multiple lines of insurance business through separate licenses. The composite license arrangement would make it easier for new entrants to the insurance market to start selling life, health, and general insurance simultaneously. If implemented, these changes will blur the lines between various categories, and the insurance sector, as we know it today, may look completely different. An insurance company which may be specializing in life insurance today may be able to sell motor or property insurance then. According to some reports, the government may look to merge ailing state-owned insurers with the life insurance giant LIC. Employee unions of these state-owned general insurers have been demanding that these companies be merged with LIC. What finally happens remains to be seen, but one thing is clear: allowing composite insurance to exist will fundamentally change India's insurance sector.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
These changes will also make it easier for life insurance companies to sell health indemnity policies. Another transformation in the last 4 years is the relationship between the central bank and the government. This metamorphosis can be credited to the current governor Shaktikanta Das. We chatted with our consulting editor Tamal Bandyopadhyay to discuss how Das has changed the landscape and the challenges for him going ahead in his 5th year of operation. Hi Tamal, thanks for coming on the show.
Thanks, Ishan.
You've been quite entwined with the RBI over the years, and this week's column focuses on the RBI governor and his 4 years in office. You draw similarities and differences with the past governors. What has been the marked feature of Mr. Das's term?
There are a lot of apprehensions when he came because the past two governors did not have the right kind of relationship, if I may say so, with the government. Raghuram Rajan had a 3-year stint, and he is probably the only governor who announced his departure much in advance. And his successor, Dr. Urjit Patel, did not even complete his full term, right? So it is a governor, and this governor was also the person behind the entire demonetization drive. So he is perceived to be a government man. He is his own man. That's what he has proved himself. There's a craze for cryptocurrency, and government stance was pretty ambivalent. But here is a governor who put his foot down. He said, no, nothing doing. We will not allow crypto because it's a threat to the financial sector stability. And he got it done. So here is a governor who can keep everybody happy in some sense, who listens to all but takes his own call. And I'll give you one anecdote which Dr. Reddy said. It was a live event, Dr. Reddy's book launch, and governor was the chief guest in Mumbai. Dr. Reddy was talking about different kind of bureaucrats and people. And he said that, there are a sort of people to whom you come with some proposal, they say yes to it, but you leave that person's room not so happy because the way the person said yes. And then there are bureaucrats. You come with a proposal, he said no to it, that bureaucrat, but you come out with their room with a lot of happiness because the way they say no to it. And then he looked at this governor who was sitting on the front row after his keynote address in the speech. So he is that type. He is a trapeze artist. He knows how to keep people happy. And he has never compromised the autonomy of Reserve Bank of India.
You talked about the previous two governors, and from what I can remember, Mr. Rajan would be remembered for his AQR reforms. Dr. Patel would be remembered for his MPC reforms. What is Mr. Das's marked moment there?
Mr. Das has handled it with care, handled it with precision, handled it with clinical precision. So, waving through the COVID pandemic and then fighting inflation. Well, he was a bit slow in reacting to it in the beginning. That's the one can find fault with him. But then he came back with ferocity to fight it out. And even though he speak, he said that fight against inflation is not over, rightly so. So in that sense, Raghuram Rajan came when our current account deficit was its historic high, inflation was very high. So he fought, he managed them, and then he started cleaning up the banking system.
Yes.
His job, which was not complete, was taken forward by his successor, Urjit Patel, and also Urjit Patel made it an inflation targeted central bank. Current governor's task was very different. First, the COVID, which we do not know whether it is over as yet.
Yeah.
And then, of course, the fight against inflation.
Because you talk about his nimble-footed act and the rates as well, what do you perceive as the challenge for him given that Fed and BOE have raised rates by 50 basis points?
Definitely, I think we are not yet through with the rate hiking cycle. I think I would like to believe there will be yet another rate hike in February. If at all there is a pause after that, or we need to watch and wait and watch. But certainly, we can't rule out at least 25 bips rate hike from now on, from the current level. So the fight against inflation is not over as yet, and he will take it forward to its logical conclusion.
Well, we have elections in a year. One of the key preferences from the government during this time would be to maintain growth, whereas RBI's mandate is inflation. Can he balance the two?
Yes, of course. I mean, RBI now is an inflation targeted central bank, unlike earlier when it had multiple tasks. And in election time, certainly the focus will be on growth. He's aware of that. So, which is why I would like to believe that the kind of rate hike which needs to be done, he will be quick in doing that. So we need to see when the cycle ends, when does he press the pause button, and during the rest of his regime, that's 2 years, whether there will be any rate cut, and if that, when, that's a big question. Will we see it in the next year, calendar year 2023? I'm not very sure. But for the time being, I think the key takeaway from his tenure in the last 4 years, if you ask me how to look forward, he will not give up fight against inflation.
Thank you. Thanks a lot. From what I understand, all that remains to be seen is if he can say no to the government and yet keep it happy. Thank you for your time. Have a nice day.
Thank you.
Kamal says that Das has been nimble-footed in his approach like a trapeze artist. He shall leave behind a legacy of carefully navigating the COVID crisis. Since the primary theme of our show was the insurance sector, our question also pertained to this theme. Last week, we asked if the government should privatize public sector insurance firms. Given that it has found a way out for IDBI, should the same be applied to the insurance sector as well? Most people agree. 55.8% of the people who replied to our poll said that the government should privatize the public sector insurance firm. This week, we would like to know about a news item that has been doing the rounds regarding the appointment of a private sector head to the post of a CEO for LIC. Does Life Insurance Corporation need a private sector person to run operations? Our polls open on Friday and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. A private sector person would run things differently for the firm, but will he be able to attune himself to the culture at Life Insurance Corporation? We'll be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.